Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup. This is for the last week of October 20, or make that 10/31/2014. Um, I've got on the screen here, boy, what an interesting past 4 weeks. I mean, we've just had some dramatic movement in the markets, really interesting. If you look at the chart up here, I've got the S&P 500 futures, and you can see from this point right down here in the lower left-hand corner of your screen, 2012, we've moved up very nicely, and we really never really ventured outside of this channel, except a rare venture to the north back in May of 2013. And then we've just basically just been riding this channel all the way up. And then this was when we had that big drop. It gave us a 10% drop from that prior pivot high right there. We fell 10%, and now we came in and we actually took that out intraday today, and we closed just slightly below that. So you can see, and let's just zoom in a little bit, and you can just get a little bit of a better idea of where we're sitting right now. You can see this kind of movement, and I've told our members this, that V bottom like that is fairly rare when you have such a large pullback from that point down to that point there. In fact, it gave us right at about a 10% pullback from that high pivot right there, right to this low right here. We had a 10% pullback. And then we just, as soon as we hit it, we tested it the very next day, and then we just moved up very strong. You can see this blue line was the opening price of the E-mini S&P 500 futures on 2014, January 2nd. We only ventured below it for 1 day, and then the next day we opened, and then we closed right back up. And then we haven't looked back since. In fact, we took out our prior pivot high, and we actually made a new high of 2016.75. And then we proceeded to sell off just a little bit, and we closed below the 2011 number. In fact, we closed at 2009.25 for a 20.75 gain. So this bounce here is very rare. Now, on this move up in this direction, I've been long. I've talked to our members, and I'm basically about 40% of my portfolio is deployed right now. I do expect a pullback. Now, quite frankly, in all honesty, I expected a pullback somewhere in that range right there. I expected it to come up to this area here. Well, let's see here. I expected it to come up to this area and then pull back and then make a decision point somewhere in this area here as whether it was going to go higher or come back lower and test these lows again. That's what I was anticipating. So I played this up move right here with a part of my portfolio. But then we just blew right through it, and then we just kept right on going. Now, a lot of this, I would say some of it can be attributed to the strong earnings that we've seen in the markets. We've got about almost 370 companies reporting out of the S&P. And the earnings are over 7%. I mean, the 7% growth over that. So, and the market's expecting a little over 4%. So some of that's attributable to earnings. But also we've got more stimulus. We had a surprise announcement out of the Bank of Japan around 1 a.m. New York City time. And you could see it in the charts when you look, most people when you got out of bed this morning. In the United States, you saw it. Europe saw it first. Everybody was playing it pretty strong. And that continued to drive the markets up. Now, what do I expect from here? Well, to be honest with you, I actually put on a couple of shorts in this area here. I went out of the money and I was shorting a call and going long a call up in this area here. I'm expecting a little bit of softness, a little bit of a pullback here, and then we're going to determine whether we're going to come back up, punch that out, and go higher, or we're going to be into one of these kind of choppy routines here, hitting all these various support and resistance points along the way. So that's kind of where I see this right now. We got news out of the GDP numbers. They were strong. And we've got news out of the FOMC where the stimulus is, or the quantitative easing is going to stop. Inflation is not much of a factor. So the good news, at least from the U.S. perspective, is that the markets are going to be moving according to more of the fundamentals of the market rather than the FOMC. Now, but just keep in mind that a big part of the U.S. movement now is tied in with Europe and China and Japan. And when they just continue to prime the pump, then money is going to flow into the U.S. And we'll look at a couple of the currencies, and you can see just how these currencies reacted to the Bank of Japan's announcement early this morning, Friday morning. So you can see kind of where we're sitting right now. What do I believe? I believe the upside is limited for now. I do expect a little bit of a pullback. I don't think a lot, but I do expect a little bit of a softening of this rapid ascent. I mean, that is just dramatic. It's very rare, guys, and because of all the money that we got flowing into the economy from Europe, from Japan, because the asset values here in the U.S. are the only ones really growing, and you're debasing currencies in Europe and Japan, and the U.S. dollar is getting stronger. And when you buy U.S. dollar denominated assets, that also strengthens the dollar. It also strengthens the assets here in the U.S. So that's why we're getting some of this hard movement right here. If we look at the Dow, we'll look at the Dow futures. You can see right here with the Dow futures, again, it fell only 8.7% from the prior pivot high, but you can see we actually, just like the E-mini S&P 500 futures, it fell 8.7%, but we had this V bottom, a double test, and then just straight up right here, made new highs to 17,355. And we closed here just slightly above, so we made all-time highs in the Dow. And in 2014, that's kind of where we sit at that number right there for the Dow futures at 17,290, up 176 points. Very strong. I again expect a little bit of a pullback and a softening before we can get too much higher up here. I want to see that. Now, if we have that pullback and then we get a bounce and we start rolling back, I will come in with more longs. I am still long, don't get me wrong, but I'm playing it with not a full deck right now in my portfolio. Not in my brain. That would be a rat brain move. So that's kind of where we're sitting here right now. If we look at the Russell, now the Russell is key because you remember I told you, you can see this really very marked up chart. You can see the regression lines on here. If we bounce out, you can see the Russell actually had a lot of damage done. The Russell was down 14.36% at that point there from the prior pivot high, or from the prior pivot high back over here. And we actually regained the 2014 opening price of the rut at 1156.10. We closed right at that level here. I think based on this, and this is a good sign for me. I like this because this is small cap, mid cap, and we've got to see money come into this. We have to see money come into this to support higher movement out of the Dow and the S&P 500. I want to see it. We've captured some key resistance points, and there's no reason to believe we can't go higher. I do believe there's going to be some softening in the next week or so, but then that's going to set us up to go higher. We've still got some more earnings to come through, but seeing strength in the Russell is a very, very good thing. And then finally, the NASDAQ. The NASDAQ has just been on fire. You can see right here. We took out the highs for this year. We're sitting up at this area here. You can see the NASDAQ fell 10.55% from the prior pivot high. So all of them had a 10% pullback or greater except for the Dow. NASDAQ opened the year at 35.75, and now we're sitting right at this area here. So I'm gonna move this line over, and we are now at a new high for this year on NASDAQ. So what we got is a situation where the markets have reacted very favorably to the announcement out of Japan and out of the earnings that we've gotten thus far out of the U.S. And it's really interesting because I find that the Feds, they're now out of the stimulus business for now, but it's getting ready to ramp up fairly strong or it is strong in Japan, and it looks like it could get strong in Europe. So let's just watch and see how this thing plays itself out. So these are the primary indices here. The VIX, we had a great play on the VIX. Look at the volatility here. This is a daily chart of VIX. And if I were to zoom out a little bit, you can see this downsloping trend line and just how the VIX just took off to the upside. I mean, just really took off. You can see every time in prior occasions when we got up that level, I was shorting VXX. Okay, it started right there. I started shorting right there. I picked up more shorts there, and I picked up more shorts there. I had to hold on to it a little bit, but we're now back down here with the VIX. VXX made me good money on the put, so I stayed with them, and we just sold it all off, and we got up to 31.06. And in this area here, I was also entering credit spreads on a number of different financial instruments, because when you got very high volatility, the premiums are rich in options, and that is the type of trader you want to be. You want to be a credit spread trader once you get that kind of volatility. So that's kind of where we're sitting right now on VX or VIX, the volatility. It's worked out well for us. A couple of other things that have moved nicely in our favor. Bonds is now slowly starting to give it up. You can see ever since that big move up in bonds, when we had almost $1 trillion exchange hands in the U.S. Treasuries, and that big high move right there, we've now come back down and we're testing this zone right here, this upsloping zone. I think we may have a little bit of a momentary bounce, and then I think it's going to come down and take it out, and then come down and challenge this level right here, and then possibly this shaded zone right there. So I've always stuck to my guns of saying the bond market is going to be sandwiched between that level and this level. I had thought Q4 of this year. I may have been a little bit premature, possibly Q1, but that's kind of where I think bonds is going to settle up. It's not going to go too much lower. And the reason why is that money is flowing out of Europe into the U.S., from Japan into the U.S., and in some respects that does put a little bit of an elevated number on the bond market, or it keeps the bonds up a little bit. But as you can see here, we're close. If we can break that trend line, or this zone that surrounds this trend line, then I believe we're going to go for a little bit of a dance to the downside. That's kind of where I'm seeing it right now. Again, I would not be surprised, as I said, to see bonds move up just a little bit and then give it back up, come down, challenge it, and then boom, away we go, and we take it down lower, and then we start working our way down to this area right here. Okay, so that's kind of how I'm seeing the bond market right now. TLT, you can play the same direction as the bonds. The dollar, well, what can you say? We're just very bullish here on the dollar. You can see right here, here's the new intraday high for the dollar, 87.24. If you guys recall, I said the dollar is doing this little bit of a profit-taking pullback. Let's catch it back on the rebound, and that's exactly what we did. And now we're sitting up in this area right here. So I like where the dollar is here, although I will say that we may get up a little bit higher and then again have a little bit of a pullback in the dollar. If we look at the MACD here, this thing is setting up for a beautiful bearish divergence. You can see here that's clearly higher than that high there, so you can see the line there, and you can see the possible bearish divergence should we get across in the dollar, and then these two lines go down. It's going to give us that bearish divergence, and we're going to probably come back down and test this crowded zone right here. So I would not chase the dollar at these levels, folks. The euro, again, it's just weak. Remember, I told you it was going to do this, and this is exactly what it's done. The euro's come down and tested this low, this prior low right here. I think it can come down and break it and go even lower. We did not have bullish divergence here in these indicators from that low to that low. it was relatively flat. So that tells me that any move up like that is going to end up coming back down again, and that's exactly what it did. I suspect it's going to come down, take out that, and probably come down to the 1.228. But let's see how this thing shakes itself out. But the euro is weak. Let's look at the yen. The yen really gave it up when the Bank of Japan came out and made their announcement. Look at where the yen finished, guys. I mean, again, same pattern as the euro, only more, a lot stronger to the downside. I said any movement up in the yen, we're going to be shorts. That was the short signal right there, and then bam, it just gave it all back up. Really good trade. It was a good signal for us, and this thing can go down a pretty good bit. If we step it out just a little bit, let me just come out to the weekly. I'll show you. Let's just see here. Let's move this thing up, and let's take it out a little bit just so that you guys can see just where this thing can go. If we carry this down a little bit, right down in that area, right about there, this would be let's come over here, about like that. This is where the yen can come, 0.82. Can it make it? Absolutely. There is no bullish divergence in this. Now this is a weekly chart. You can see from that low to that low to that low. We're stair-stepping down, just like that, right? We're stair-stepping down. This is a weekly chart. There was some bullish divergence right here. We bounced up a little bit. We come down and made a new low. There is absolutely no bullish divergence there. In fact, the indicators are aligned. We could come back up, bounce up, come down, and do one of these kind of things until we're down in this area here. So that is the potential direction of the yen. We've had some good plays in the yen to the downside. In this one right here, we took back in 2012. We rode it all the way down, and then we got out when it had this big pop here. But this is a nice look at the yen and where we're sitting right now in this thing. So I wouldn't chase it if you're not in it. A lot of the move has already been made. If you were a member of our group, you would have known we got in. I was telling our members, I said, okay, we're stuck in this little tight pattern right there. We're in it for almost 6 or 7, 8 months. I said if we break, take the direction of the break, I said the break favors to the downside. That's what it did. We had a little bit of a momentary support point right there for about 4 days, but it just gave it up, and we were riding it to the downside. So that was a really good trade. But anyway, that's a little bit about the yen. The other one that I like is the British pound. Now the pound, as you can see, is still in this channel to the downside. I think it's got one more move to make, and then it's because the Britain is, to some respects, a little bit affected by the euro. This is very similar to the euro and the yen. You can see this was a 3-leg. It's kind of doing one of these kind of things like that. It's going to give us 5-leg, and then I think the pound is probably going to be more prone to turn bullish before the euro and before the yen. Okay, so that's kind of where we're sitting here with the pound. Plus, we got a little bit of a bullish divergence going on there. So I would expect the pound to be moving up, but let's see some more evidence of it. And if we can get it, then we're going to want to go long the pound. Gold, well, gold gave it up today. Strong dollar, weak gold. You can see right here, very similar pattern. All of them were set up very similarly. We had that 3, 4, 5, you know, where you got the 3 and the 4 and then the 5. You had that inverted bowl kind of shape, and then boom, here we go. This is kind of where we're set, and we took out that key support zone right there around 1180, and now we're down to 1060. If I were to back out just a little bit and step it out, you can see the next level down is this one right here around 1131. That's the 50% Fibonacci pullback from all-time highs with gold. So that'll be our next area around 1132. Next one is the psychological barrier of 1100. That's where we're headed, and I'm out of it right now. But that's kind of how I'm seeing gold stack up. Silver, same thing. I had I was trading gold and silver. I had iron condor and gold and a bull put on silver, and I got out just in time, made some good money. about 55% of my max profit. Look at silver. It just gave it up and it rolled over too. Very similar pattern to gold. You can see that rounded shape there, and then boom, off we go like that. But notice the 3-leg is still down. That would suggest we may come up, form a 4-leg, and then finish it out with a 5-leg somewhere even lower. And it can always go lower, folks. You can see the next lower spot for silver is around 1469. Okay, and let's see how this thing shapes up. If silver can claw its way back up above 1664 and hold it, I may be more prone to play a bull put on silver than I would touch gold. Oil was weak today, about 42 cents to the downside. Remember, most commodities get weak when the dollar gets strong. Oil is just really falling off the table here. We're sitting at a key level here with oil. You can see how it's holding up right around that 79, 78 area, roughly. Again, it's a 3-leg down, so that tells me expect a bounce. We could come up, get a bounce, challenge this resistance, and then come back down and give us something like that. So that would give us our rounded pattern, just like the other ones that we're seeing right now. That's how I'm seeing the oil market. If we look at wheat, I am got a bull put on wheat. Or we're on a 3-leg up. I said expect a little bit of a pullback, but I am basically expecting wheat to go higher. We cleared a major hurdle with wheat when we cleared the 50 EMA right there. Also that key pivot from over on the left-hand side of the screen there. You can see where we're sitting right now with this one. So I would expect wheat to go up. We're long wheat. Corn, very similar. Here's the corn chart, the daily price. Nice movement up. Now notice here it's just the opposite. We got a 3-4, a possible rollover. But I don't see that just yet. In order for this to occur, I want to see a cross in our 412. It'll have to take out the 50 EMA. If it does that, then I'd be more apt to say that. But we did have a beautiful bullish divergence from a low there to a low there, a low there, and a higher low there. So you got the divergence in the indicators. So that's why we had, I said, let's go long, and I selected wheat to make the play on. Meats, I'm out of right now. It is, you can see it had a little bit of a give right here, a little bit of a fall. I want to see where meat opens tomorrow. I'm sorry, on Monday, and if it comes up and it opens weak, I'm going to be more interested in shorting meat, live cattle. That's kind of where I'm sitting with that one right now. All right, folks, that was a very quick update for this week's play. Very interesting. I'm expecting just a little bit of softening early next week, and then let's see if the markets can take us higher. Again, I'm only in with 40% of my portfolio. My ideal before I go in with even more would be let's have a pullback and then let's have a support area, consolidation, and then a move higher. On that second move higher, I would be more apt to take some more longs. Right now, I'm playing it very cautious. All right, everybody, have a great weekend. And don't forget, for those of you in the U.S. and most states, turn your clocks back an hour at 2 a.m. on Saturday night or Sunday morning. Have a good one, everybody. Bye now.